Perfect. So let's start. It's my pleasure meeting you guys. And first of all, I want to thank each and every one of you for being a member, for being a participant, for being a supporter, a fan, anything that you are to the community, anything you guys make this group. I believe some of you have heard this voice from the day one. I believe someone got us in the middle of the journey. But the most important thing is we are together. We are making things happening. We are making things happen and we are happy either way. And I'm very, very grateful to each and every one of you. It's very impressive and exciting to know that behind each and every message that I type in that channel, there are actually real people behind the scenes. And that is a very good reason for me to be grateful. A very good reason for me to be grateful to each and every one of you. I want to show my appreciation to each and every one who managed to attend to this, who is going to watch this in form of the recording and stuff. Please accept my gratitude. Okay. So the reason for this is to make the concept a little bit clear to each and every participant, right? Why I trade the way I do, what is actually the way I do and why I trade that way, and the benefits and the demerits also of trading that way, because there is always a disadvantage to every advantage. So we're not gonna just look at the bright side and the beautiful side of why I trade the way I do, but we're also gonna look at the demerits of why I trade the way I do and how we can handle the demerits or the drawbacks of how I trade the way I do. So before we look into all of that, the detail, how do I trade, right? Let's start from my name, why I named my channel the way it is, why the ideology and the methodology is based on the way it is. It all comes from somewhere. So to those who know me from way back, I trade using the BTMM concept. I traded using the BTMM concept mostly in my very early days. I'm talking about 2019, 2018, late 2018, early 2019, when you guys knew me from the very first video on YouTube. And I've always traded the BTMM way. Why? Because I've always believed that there is the other side to what everyone knows, right? There is always something about being unique, about being different, about being special. Well, I've heard a whole lot of stories about support and resistance, supply and demand, Fibonacci trading, and all of that stuff. I followed that stuff for a while now, since I was a beginner, and I have learned a lot. I appreciate that stuff because it was an eye-opening. Most of the stuff was wrong stuff, biased stuff, distorted stuff, but it was eye-opening, and I'm very grateful to all that wrong stuff that I had. Now, I believe that there is always the bright side or the bright view in the opposite. That's why I trade the way I do. That's why I trade the BTMN way, the market maker way, the inner circle way, and the supply and demand liquidity way. Now, you have to realize that in this market, it's made of, it's a composition of profits and losses, winners and losers, buyers and sellers. So for each time that you press a buy, right, you have to realize that for you to be a successful buy, someone, somewhere, somehow has to be selling, right? And for you to have a successful sell, someone, somewhere, and somehow has to be buying. That's the ideology of the market. Any sort of market, it could be a physical market, a forex market, a stock market, whatever market. You cannot be buying something that is not sold. The same applies, you cannot be selling something that is not bought in this case. So the idea of me trading the ICT method or the BTMM method was for me to be able to buy at a very low cost and to sell at very high prices, right? And there's something that I learned from my mentor. I'm a Dan Perner student. No one knew this, I'm telling you now. I'm a Dan Perner student, and he always told me that success leaves clues. And I've taken these words, you can write that down. It's a very important phrase. Success always leaves clues. So He told me that I kept that. I've never forgotten those words. Whenever I take a trade or whenever I look at the market, I always look at the success clues. There is something called liquidity in the market. Now we are looking into the Forex market, the actual Forex market, the chart, the price time chart, this chart that is in front of us. There are clues that it always leaves. And you have to know that the clues that you want are the success clues. Success leaves clues every time. Now, every high and every low in the market is predefined. Every high and every low in the market is predefined. Those are the success clues. So you can consider each and every high and each and every low in the market is a success clue. Is a success clue. So each and every high and each and every low is a success clue. You have to realize that price does not just feel like going up, then feels like going down, then feel like going down again, then feel like going up. Price does not do how it feels. Price reacts to market sentiment, and we build market sentiment. The market makers build market sentiment. I'm not going to draw a graph of or a pyramid of how the market hierarchy is made up, but that's too much detail. I just want to quickly rush into things that are going to be a benefit to all of us in the limited time that we have together. Now, I was talking about the highs and the lows in the market. Each high and each low in the market is predefined. Now, let's define each high and every low in each low in the market. Let's quickly define each high and each low in the market. For each low, right, for a series of lows, right, let's call them a series of lows. Like, for example, right here, we have a series of lows where market keeps on bouncing at a very same area. We have heard that this is a support area from the baby pips, wherever we learned, whichever way, I don't care, I don't mind. But the concept remains true that this is an area of strong support. Now, when the market creates this type of low right there, which actually strikes below this low right there, from the basic understanding of things, this is a breakout, right? Now, when it creates this, it becomes a false breakout. And I don't know whether people are supposed to wait for situations to occur before they give names, or they're supposed to give names as situations occur. If you ask me, I'll tell you, people are just supposed to give names as things are happening. People give names, right? Because if I wait for it to break this area for me to give it a name, then it means that I have lost this position as an entry level. If I was going to take an entry exactly at this level. So what happens is, this is a support area, and this is a low area. A support area and a low area. Success leaves clues every time. I will always say this. Success leaves clues. Now, clue number one that I'm going to give you that success leaves is below each and every low, there is liquidity that forms below each and every low. So clue number one is liquidity that is below each and every low. So right here, it's a zone of special liquidity. What type of liquidity? Word number one. I've introduced a new term and it's called liquidity. I don't care whether you knew it before or you didn't. Liquidity. The word liquidity simply means money. Well, this could, it is relative. How you choose to name things and what names you choose to give, why you choose to give that name depends on who taught you and why he taught you that way. But according to me, my students, I respect each and every member of Nice Pips community who is in this area. It's a pleasure having you. If you are a Nice Pips member, mentorship, student, signal, anything, all protocols observed there. So it all depends on how you learned, who taught you, and what. But to me and to my team, the word liquidity means money. So there is liquidity that is below each and every low. And the liquidity that lies below each and every low is called the sell side liquidity. Right, this is called the sell side liquidity, and we are going to define why it is actually called the sell side liquidity. Now, when market forms lows like this, support area is how retail traders are going to see it. By the way, retail traders simply means me and you. Retail traders are going to see a support area. And retail traders believe that if ever a support area is struck or it's broken, then it means that the market is going to retest It's going to retest like this, then start dropping. So they are definitely going to place sell orders upon a breakout. We have heard of this concept from baby pips, from wherever we learned. We have heard that whenever price breaks a support area or it breaks a resistance area, then it means that it's a counter trade or it's a reverse trade. I don't know many terms, but to us, we define it as a sell side liquidity. Now, why do we call it a sell side liquidity? Because whenever retail traders sell here, they are selling at a very low cost. Look, for example, look at the price that they are selling this asset. This is a very low price. They're selling at a very low price. Now, we, as the market maker traders, because success has left a lot of clues right there. What clue? Sell side liquidity. We are going to buy from this sell side liquidity right here. So this is where we are actually going to buy using a legitimate strategy. We don't just see market break support, then we start buying. No. We use a legitimate strategy to buy. We don't just buy for the sake of buying or sell for the sake of selling. Right? We use a legitimate strategy. So because this is a sell side liquidity, we are buying all the sell side liquidity that they have placed at a very low price. Sell side liquidity, the sell side money. We are buying all the sell side money. Now let's look at the opposite, which is the buying side. For example, success leaves clues all the time. Let's look at this high right there. If we claim that market gives predefined highs and lows, right? Let's look at the high right there. If you ask me, I don't know how many times, you name it, I do not see any difference. I do not see any difference between this setup right there and this setup right there. So what is happening? What is happening is market formed a high, right? Formed a high, AKA a resistance area. If we're looking at it with retail eyes, this is what we call a resistance area. So because retail is seeing a resistance area, we see what we call buy side money, buy side liquidity. Right? This is buy side liquidity. And from the buy side liquidity, we want to see market clear all the liquidity that is above. We're going to talk about clearance, right? For now, let's just see market breaks that area before it gives a drop. Now, how do retailers see this and how do retailers want to interpret this? Or how are the retailers going to react to this? The retail traders are going to see a resistance area. They're going to see resistance being broken down and they're going to start buying. Now, because they're buying at a very high price, if you can see, we are starting to sell to them, right? Because you are selling something. Let's claim that you are selling this next chain barrier right here, and you see people offering a lot of money. Person number one offers to buy it at $2. Person number two offers to buy it at $10. Person number three offers to buy it at $30. Definitely, you're going to want to sell it the more the offers are being placed at a very high price, because the idea of each and every market in this world, it doesn't matter whether it's the physical market, the forex market, the stock market, the real estate market, whatever. The ideology of trading, the ideology of buying and selling is always sell at a very high price and always buy at a very low price. That is why it happens right now. Are we clear? Remember, we use Y to confirm a yes, and we use N to confirm a no in the chat. Are we clear until now? Perfect. Perfect. I'm starting to see Y's and N. It's very important that you react with your Y and your N so that it makes sense that I'm talking to real people, physical people. Perfect. So let's talk about liquidity grabbing. Right. Let's talk about liquidity grabbing. First of all, I'm going to define the word liquidity again. Liquidity means money. It doesn't change. It never changes. It will always hold like that. So right here we have a low. And below every low, there is what we call sell-side liquidity. Why? Because we expect retail traders to want to sell whenever market price breaks this line of liquidity. But until now, I've only spoken how retailers see. Now let's talk about how market makers see this. Market makers are going to see a lot of support, right? When they see a lot of support, they're going to break support, making it look like a false breakout. That's what retailers say, and I'm going to repeat this word for now. But instead of calling it a false breakout, we, as the members of Market Maker Moz, the members of Nice Pips, we decided to name this area a stop hunt. And I'm going to say why. Why? Because if ever they are going to buy from this area, if ever the retailers are going to buy from this area, from the area of support, they are definitely going to have their stop losses just underneath the low. And if they buy right there, if they buy anywhere around support, they're going to have the stop losses taken before the market starts actually going in that direction. And I'm sure all of us right here, even if we're a million in this meeting, we all relate to a situation whereby your stop loss is taken out. Then as soon as your stop loss is taken out, the market starts going within your direction. And it's super frustrating. It is very frustrating. I'm sure all of us relate to that. The same applies right there. Let's assume, we're not assuming, we have found resistance right there. And because prices hit another level of resistance, retailers want to do what? They want to sell. Now, this is not a false breakout. This is an area of what we refer to as stop hunt. Market is hunted all the stops that are around or that are above the previous high. What stops am I talking about? I am talking about the stops of the buy side trades that are taken within this area. Now, those are the first stops. The reason why it is called the stop hunt is because the stops of the cells that are regarded, that are based on this resistance area are going to be taken out right there. The second reason why it is called the stop hunt is because for each time that it breaks, it activates all the buy stops that lies above this resistance area. So because there are buy stops that lie above this, because of the breakout traders, right? The breakout traders believe that if ever market breaks a resistance area, then it's going to continuously go up and up. But in this way, it's not going to do that. It's going to activate all the buy stops, then sell the price, which means that for all the buys that they took, we are selling to them. We are selling to the retailers. Success leaves clues. That's a very important statement that I was taught, and it's a statement that I always work with whenever I pick up a trade. I lose some trades, by the way. I lose many trades, but not as much as I win trades. I win trade, I lose trades. The idea of profits and losses, we're gonna discuss it some other day if we ever have an opportunity to. But now let's talk about the clues and let's talk about the liquidity in the market and how things actually work out. And I'm gonna look for another example. There is a question that people always ask me, and it always go by, which time frame does this apply? And the answer to that one is it applies to each and every time frame of your choice. You have to realize that each and every highs and lows in the market, sooner or later, they are definitely going to be taken out. For example, if market formed this low for us, this low right, let's dash a line like this. If market has formed this low right there, it means there is special type of liquidity that is within this low. And there are many methods of viewing this low right there. There are many methods of viewing this low. Retailers are going to claim that this low is a support low. Some are going to call it supply, doesn't matter, whichever way. But we do not care about all of those words and why those words are named like that. That's nothing that interests me. The most important thing that interests me is what happens below the low. The likelihood of how price is going to react within this low is what more matters the most to me. Now, what I understand is the retailers, most of the retailers are going to see this as support. So they are definitely going to want to buy. And if they buy, the market maker is definitely going to grab stops. So 20 to 30 pips below this becomes my area of stop hunt. That means that anyway, I want to see price dropping below this low right here in the name of stop hunt and in the way of activating all the sell stops. That defines this area as sell side liquidity. Sell side liquidity like this. I'm sure this is crystal clear to everyone. This is what matters the most to me. How price is going to react to a specific area when it gets there, not giving a zone a name before it gets there, because I cannot call this support. It's definitely going to look like support for a certain time, but it's not going to withhold for a long time. I'm not saying that retail traders always lose. No, it doesn't work like that. Retail traders win some trades, lose some trades, but it's a game of consistency. How long do you stay in the game? Not how much you win or how much you lose. How long are you willing to continue in the game? That's your consistency. I'm sure that's making sense. Success leaves clues. So that was clue number one, the highs and the lows in the market. Now, still talking about the highs and the lows in the market, there are very important highs and lows in the market that we all have to pay attention to. And I'm going to name them on a whiteboard. So the first highs and lows that we have to pay attention to are the yesterday highs, and lows. Now, the highest price point and the lowest price point of the yesterday. By yesterday, I'm simply saying the grade 1, standard 1, yesterday terminology. That is, if today is Monday, yesterday was Sunday. If today is Sunday, yesterday was Wednesday. If today is Tuesday, then definitely yesterday was Monday. That's the yesterday that I'm talking about. So the highest point or the peak point high of yesterday and the peak low of yesterday are the most important highs and lows that we have to take care of. Not the most important, but are very important highs and lows that we have to take care of. Scaling down, we have the session highs and lows. Success always leaves clues within specific areas, right? Session highs and lows. The Asian high, the Asian low, the New York high, the New York low, the London high, the New York low. I do not like talking about this a lot, especially in these types of platforms, because it is limited knowledge. It only applies to Forex pairs and to other indices. It does not apply in the volatility market because we do not have sessions in the volatility market. We don't have Asia, New York, London in the volatility market. If you have had someone telling you about Asian session in volatility, go and tell them that it's not true, right? It's not true. It's not true. It's not true. For the sake of not being true. Perfect. We have the previous day. We have the previous day highs and lows. Now the previous day, we mean if today is Wednesday, then the previous day is Monday. Just skip a day before, right? Let's skip a day before. That's the previous day. We have the last week. The last week highs and lows. The monthly highs and lows. Highs and lows. So let's just look into these. And because if I just say that each and every high and each and every low in the market is a very important aspect, it ends up not making sense, because whenever market moves doing impulse retracement, it always makes a series of highs and lows. So before we close this session, because I'm left with something like 10 minutes because of Zoom, let's go on to a 15-minute time frame and let's define the days so that we can just see market reacting to days, right? So let's do this. It's something like 8 minutes. Mm, 210. So the day actually starts right there. And we have another day that starts right there. Perfect. And also want us to pay attention to the previous day. I really wish I could talk more and more and more with you people. Right there. So now let's look at the these days very low. Right there. This is the lowest price of this specific day. Let's, I don't know, depending on the broker, but right there, relative equal lows. Now, look at the way price attacked the lows that lied below the yesterday lows before it reversed up. And now we're starting to have cool features. And the first cool feature that I've always spoken about from the day one that I started publishing my work was the anatomy of W's. Now we have the pattern. I've always called this the pattern below what? Below yesterday low. Very important. The pattern below yesterday low. This pattern, whenever you hear me talking about the pattern, just know that I'm talking about the stop hand. The same applies with the highs. The same applies with the highs. Still looking on the very same chart. I'm not going to be scrolling charts and changing all the charts over and over again. Let's just look at what we have, work with what we have for the sake of time. So this is the high point right there. And now look at how price attacked the highs before it started all the drop. Now, the cool features the M, the W, happening way above yesterday high, below yesterday low. Success leaves clues. You always have to pay attention to the very special lows. If I do this on Asian high, New York high, London high, we are going to see the very similar principles, the very similar principles. If I had time, I'm left with like 6 minutes, I could mark Asia, London, New York, and I mark New York high, London high, and you see market price clearing the highs before it drops a low, clearing the lows before it starts the rally. Did we understand the clues of success in market movement? The highs, the lows. Is it making sense? Perfect, perfect, perfect. I see very large reaction in the chat. Now, I'm going to attend to, maybe I'm left with like 5 minutes, 40 seconds. Is there anyone with a question, a quick question? Maybe that's gonna help everyone. Quick question before I call it an outing. And I'm going to call out for another lesson, another session. I don't know when, but soon, because I feel like we're not done yet. We're not done yet. I've told you where you should look for your entries. These areas that I've shown you guys is to know where to look for your entries. Where do you look for your entries? You don't just see any W, then you want to buy, or you see any M and you want to buy. You have to realize that that W or that M should be in form of a stop hand, and it should happen at a certain zone whereby it has grabbed some certain type of liquidity. This is what I've shown you today. Yes, it applies to volatility. Yes, sir. Does this apply to volatility and on what time frame? Yes, it applies to volatility on any time frame. But since I'm doing this on an M15 time frame, it's very important that you also study it on an M15 time frame. Then the next time that I'm going to have a session with you guys, I'm going to teach you how to look into a bigger time frame for the direction. The bigger time frame is always for direction. The lower time frame is always for entries. So if you know that your direction is to the upside, according to my YouTube channel, you go to my YouTube channel, you subscribe, you watch how to define direction using order blocks, direction using supply and demand, direction using exponential moving averages. Then you come to a 15-minute time frame and you apply this knowledge. I'm going to have this video posted on YouTube. It's going to make a very serious impact in your bottom line. Any question? I'm left with 3 minutes, 59 seconds. Any more questions? 5, 4, 3, 2, 1. Okay, if there are no further questions, guys, I want to hope that this knocks some sense into someone. I don't have to talk to everyone. I just have to talk to a few people, 1 or 2. It makes a very huge difference to me. And I hope this makes sense, guys. I'm going to have this video posted on YouTube, and if you're watching it from YouTube, please click on that subscribe, turn on the notifications on, because not always, but whenever I do, I release very, very touching content. And once again, I appreciate each and every one of you for being the part of this family, for being members of the Market Maker Moz ever since we were called Nice Pips from the very early days. I appreciate everyone who's in my mentorship channel, everyone who has been taught by me, everyone who has participated in the 30 days, everyone who's in the Signals channel, everyone who is in the Autobot channel, even in the free channel. I appreciate all of you, and you guys make a very huge difference. You guys have made my life very different. I appreciate each and every one of you. I leave you guys in peace. And thank you for participating, guys. Thank you.